Greetings, market rebels. Welcome to this week's macro measure combined with this week's sector situation. It is Friday, July 19th, 2024. I waited until after the close here. It's probably around 4:30 p.m. on the East Coast. I'm Wayne, and we're trying to dig into what happened in the markets this week and what this means going forward. Here's our trusty disclaimer. And here is our trusty intellectual property rights notice. And finally, here is our selective review of last week. And my first thing to note would be, even though it's not on the slide, I would just set your playback speed to 2x and see if you can handle it, because I do a lot of talking and we want to get this compacted if we can. But there's a lot of things to mention this week. I'm leaving a ton out, but that's by request, so by design. But anyway, my personal note that I don't get to share during the week is just that I would take this very seriously, what happened this week. I think that there's a chance for the balance of the year to be super volatile as a result of what happened over last weekend, and also what happened news-wise in the market this week, and also what happened in the market in terms of the technical situation. So that's where I'm at on things. I don't, like I said, I don't get to always share during the week. It didn't get to do it again this week, but really changed in terms of my scenario that I thought would be most likely. I thought if they had good earnings, they'd try to really put the melt in, and then you might see some kind of a pullback type market in August. To an extent, nothing special, and then go from there if the earnings were good. But I think ASML really devastated the market, and I'm really curious about that. We'll have to see what happens going forward. But I think that we were there, in time with some of these recent reminders. So the first one would be the side note from last week, which was roll your calls and avoid complacency. That we shifted to that from IV acquisition and other things, which I'll repeat later. But we probably couldn't have gotten luckier, because that was how we finished last week. So despite everything looking wonderful, and I think I said, it was all good. There's a note on that somewhere in here. It looks too good, all good. When everything looks so good is really when that's really when you have to be careful, because nothing really lasts forever, as we all know. So last week we had the trend is the trade yet again. The gang's on the verge of broadening out this rally in a big way again. And we were wondering if they were looking at things too rosily, too soon, with respect to lower sooner on rates. And I still think that's a possibility. Now, if the market really craters, that does probably help them a lot. But aside from that, I don't think they're on target with that. I think it's certainly more possible than it was 6 months ago that rates start coming down. But I see longer term data that's been a good guide to follow, and it's just not cooperating with the inflation is lower camp, despite whatever they want to trot out there. So I still think it might be too rosy. The EPS reactions and the Trump-Biden comments really provided the cover story that they could use. And it was probably legit for a change, where it was like, we better really start taking these profits that are here in so many other things, because this does not sound good from ASML. So that was overdue, as a lot of you know. We talked about how the dollar, TNX, and VIX were all smoked lower. We did note they had big time complacency. We ran that for at least a few weeks. And then all things considered, we were looking at it that way. It's all good. And we also had the VIX could get further smoked, the PE cycle, July. In other words, the presidential election cycle in July, and this July being set up nicely for the fourth year, typical Julys. However, its seasonality shapes up starting soon. So that was in relation to the VIX. The VIX seasonality was set to start helping it, and it kind of really did, just about right on time, which is, again, just odd. But we thought maybe, just maybe, if there was the melt up, they could get it down a little further, and then maybe it would be even better value short term, but still great value in the long term. in retrospect, the VIX woke up very quickly this week from the complacency. It was right on time, and then it made really acquisition now a lot more expensive, which is a good thing. We were running the get yourself some longer dated IV, get some net puts on the cheap before that, which is good that we were at least alerted to that fact, especially with the sweet spot appearing for the VIX. Still have sense that off-camera developments are likely to shock the market more than what the market is ignoring. This applies to the next few months, but subject to change. This really could have been the case due to the Trump attempt, right? Where I had obviously had no idea something like that would literally happen the next day after the recording. That, and it wasn't even off camera. Kind of ironically, right? It was on camera. But what I meant by that was the focus of where the market's camera has been focusing. That's what I really meant by that, just in case someone's new and didn't catch last week's video. But that's what I was thinking, something crazy like that, which, not exactly that, but something crazy like that could happen that would really be the impetus for selling. So I would say that didn't really seem initially to be the case. But it could, I think, obviously, had it not been for the fact that we're a near miss, and if it was something obviously far worse, which could have easily been the case, then it really could have shifted things. But really, it actually came back to the typical market news, with, I think, mainly in the form of ASML, and then some comments Trump made with respect to tariffs, and some comments that Biden made with respect to his policies going forward with respect to trade and semis and different things. So it all became just reasons to sell. And I think that if you had these tremendous gains, and this is something I think we talked about, this is why you have to roll and lock things in to a great extent or great degree, because why play that game? You've had why let it all just dangle out there, right? Why keep building up your stack of chips and betting it every time in the market when you don't have to, right? You can still hold on to the overwhelming majority of your gains and still play the game to the long side if you want to. So that's what rolling is all about. Anyway, the bottom line is that the longer term trend remains up. The EPS, we put the EPS fallout on balance likely determines our short term fate. Is it going to be a melt up or retreat reversal of the rotation? So in retrospect, I think the OB-ness we had climbed a little bit further. It did climb a little further to start things out, but I think it made climbing further a challenge overall. So they took things up a little bit there on Monday, and then that was even further overbought in the short term. That made it tough. And then clearly, I think the EPS fallout from ASML was really read very seriously by longs. And I think a lot of people were long some of these really heavyweight names that a lot of players were in, very crowded trades. And so a lot of things were getting smoked that were probably over-owned, if you want to call it that. And some things initially were jamming that were probably overly shorted or they were underexposed in. So it was very interesting in that way. Excuse me. So a lot of the sectors that looked great, right, that finally joined the party in a big way, they reversed back down, right? So that was the final note there. So for this week, you'll notice this is truncated, but there's 3 slides. We're not going to spend a ton of time on them. But I would just say, look, I think everything just got very serious in terms of risk with everything that happened since I recorded last week. I think the balance of the year is very real in terms of risk. I think all hell could break loose. I'm just going to be perfectly frank about it. So many of you know I try not to be a table pounder. I try not to push out a ton of hyperbole. But Vol's making a comeback. You got such an incredibly ugly week in SMH after a false breakout reversal, which we talked about last week. These are serious things when that's your leading sector. And then when you see what happened in XLK and XLC and the Qs, right, all these big dogs that were really leading this market up, for a while, they really have come under very serious pressure. Certain forms of support have cracked. It got very real very quickly. So I think you can't rule out, right, that we were looking too good, where everything looked great and then it all got changed very quickly. And that's really right, kind of like a psychological rug pull too, right, where everything looks wonderful and everyone's patting themselves on the back about how now this is going to join the party, that's going to join the party. I mean, it certainly was set up to potentially do that, but now you have to really wonder. I think you have to take a look at these EPS. And before, I thought there were going to be the final blow to the Bears that held on, and they were going to be carrying Bears out on a stretcher more than likely at the end of July, once they impaled them with and fresh shorts on earnings, by people that just were doubters. But you could still have something similar to that in that they move the market back up, getting fresh shorts caught, and they levitate it back up on reactions. I just think that that's that's now really kind of a tough call. I mean, at least we knew coming in that earnings reactions commentary would probably play a big role in determining the near term future, and that certainly seemed to be the case. So at least we weren't caught off guard by that. But what comes next, I don't know. I don't know if ASML, the fact that it just got completely annihilated and so many other things were annihilated in sympathy, if you will, does that represent things properly? Because it may, right? I'm certainly not an expert on what happens in the semi sector. So maybe their comments were just too difficult. I mean, too challenging to ignore, and that was part of it. Or maybe they don't represent the entire situation, and you're going to have a bunch of people expecting the worst that now get pretty good things coming out from a lot of other semis companies and tech companies. I don't know. I just don't know. But that means that we have, I think, dual-sided vol. That to me is back now, where you could see a real serious levitation, and they could just use those earnings to do that if they're supportive of that. And if not, this could really be, you could really be visiting, SMAs that are lagging behind the action further. In other words, ones that are further to the south. So most sectors at least struggled, but many were hit back down hard. The three, the dollar, the TNX, the VIX, they were all bid. So it was the inverse of last week. The VIX complacency is suddenly gone with the wind. Like I said, it appeared on Q. The melt-up scenario is gone. But like I said, the bounce squeeze I just talked about is possible. But I still would repeat that we need that EPS guidance to allow. So I can't, unfortunately, I'd love to be able to tell you this week, just like I would love to have been able to told you last week, what ASML was going to say and what kind of a tone that would set, but I just don't know, right? I don't have the time to possibly cover all that or the resources. So it's beyond my grasp in the charts to be able to really say much about that. Wheels still coming off bogus data policies. As I noted, it has permeated nearly everything, along with corrosive corruption everywhere. That's how I see the country. I hope that doesn't offend anyone, but I'd rather tell people the truth than cuff things. And I just think we're an incredibly corrupt country at this point in time. And I think there's plenty of, no matter really what your persuasion is politically, blah, blah, blah. There's plenty of blame to go around especially in the two big parties. But this is what it's leading to. And this is why, one of the main reasons why I'm super concerned now, where I was concerned, and I think the concern was building. I have kept these things away in the interest of time that I don't normally. I used to at times go through 40, 50 tabs just to flash them so people sort of had a sense of what was really percolating out there in terms of risk, because I think that's so important. A lot of people get lulled, especially people that are new, and you're in a bull market type environment, people get lulled into this false sense of security. And I've seen it happen to more than I could ever want to remember, because I've seen the devastating aftermath for people that just didn't take risks seriously and didn't listen to people like, my colleagues and myself trying to tell people, you've got to roll, you've got to be prudent, you've got to do this. And they just let it all stay on the table, their winnings, that is, and their capital, their principal. And then they give it back and then some, because they just think the bull market will never end. And I hope it doesn't, but it usually does. Anyway, this is why this is so important. I don't like I said, I've been staying away from these, but this is the leading economic index from the Conference Board. You can see the history here. Maybe to a certain extent, you can see the history there. Let me see if I can get that. Actually, it looks like that might have truncated, so just bear with me. Um, I'm not sure why it did that. Let me go back to this for us. Yeah, there's the years on there. So I had to go to there for that. But let me hold on one second. Let me get this. Hold on again. There it goes. So why is it truncating that at the bottom on me? I don't know. What I may do though is just pull this up here to make sure that when we go back to the larger view, let me see if it goes back to the larger view for us now. And it looks like it is now. So that's good. But what I wanted to point out is this goes across a lot of time, right? We're going back decades and decades, and you can see that this index usually starts to roll over right in front of recessionary periods that are those vertical gray bands. And it's got a pretty good track record, as you can see, with respect to it rolling over and recessions occurring. And so this right here, right, this is one of the deeper dives, right, where you're at minus 14.2% off the peak. And you can see, right, how deep this is. And of course, usually, right, when you get deeper, it's a longer, deeper recession type of a situation. And yet somehow, right, they are asking us to believe that this economy is actually in great shape or whatever they're trying to sell it to us as right now. And I think the importance of this slide is that uh, if this is accurate, let's just say for argument's sake, this is accurate, then there's a lot of fallout on the way, right? Where if this is right about a recession, the way that they have had everything priced and the way that they've sold everything and the way they've covered everything up, this really is the house of cards coming down if uh, if things start to really reverse in terms of equities and people start calling BS on things and the truth starts to poke its way out. So, and they might not be able to mask this anymore. Right. So this is what I think I'm worried about for everyone. You know, this has been going on for a really long time. And I think if there's a monkey wrench thrown into this whole whatever they've been doing to, I guess it's really the $1 trillion per quarter they've been finding a way to put into this economy. That's the estimates I've seen through mechanisms through the Treasury. That's a lot, right? That is a lot of cash getting flooded in. If something really hiccups there and reality starts creeping again, this is going to be bad. I mean, more likely, just based off the history here, really bad. So this is one of the reasons why I'm where I'm at now. You know, and you might say, well, boy, you really changed. But yes, I did. I had definitely thought there was more potential in this market, and there may still be. But I think you have to change. And I felt somewhere around late October, early November of last year that we couldn't rule out new all-time highs. And I think I literally said I would take this seriously if I were you, meaning investors, when we were holding a cocktail hour. And I remember it because I was traveling and having a hard time in the hotel finding a good place to connect. And I'm looking at this as really the mirror right opposite of this, where I'm not predicting that we're about to make new lows and the whole thing's I'm just going to fall apart. I'm just saying that you're better off if you've done really well. Let's be prudent. There's nothing wrong with being prudent and not getting your clock cleaned if really the whole like leg of the stool gets pulled out here. And I've seen it happen before, and it's really ugly. And I think that just the climate that we're in, the backdrop to everything, this is a time where the risk to me has really ratcheted up. There's, I'm just going to say I just point blank do not believe that the person they're identifying that supposedly tried to shoot Trump. I think that person was a patsy, as is nearly always the case. And I think that that's the fall guy clearly to me. Whatever happens from there, I don't know. I don't know who's responsible. I just think that when you go through periods like this, there things tend to get crazy historically from all the research I've done and books that I've read. And so it's a personal thing. Please don't hang that on market rebellion. It's if you have a problem with it, you can have a problem with me. And I don't know what happened to respectfully disagreeing with people, but that's gone. And it is where it is, and I've adapted to it too. But I just think that's the way it is. I don't believe the Kennedy story. If the Kennedy thing were on the up and up, they would have released all the information a long time ago. They wouldn't have held it back for six decades. So that's just where I'm at, and I think that I'd be very surprised if we just have this one and done situation and there aren't any more problems. The Microsoft CrowdStrike thing, another big thing this week. So I think things are only going to ratchet up from here. There's been rumors of Biden being replaced. There's all kinds of different things that really all lead to volatility, and it can be in both directions. So that's another factor here where it's not just pound the table. We're about to get killed. That kind of a thing could happen. Just saying that this is not the time to play games with risk. This is not, in my opinion. Obviously, I'm spending a lot of time on this, so I clearly mean it. I hate to see people work really hard with their trading, build up their account by being smart, doing good things, being disciplined, and then just get a little bit too cavalier, a little too disrespectful of risk, and give a lot of their money back. I mean, I've seen it. I can't even tell you how many times I've seen that in my career. And it's just heartbreaking because sometimes you can't tell a person something, and then later on they don't even want to talk to you, right? I've tried to talk to people, and literally they don't even want to talk to you after it's over because you're the guy that tried to tell them just to be prudent. I hate to see that happen, but it does. That's been my experience. So I hate to see that happen to anybody that's worked that hard to build it up. So I would say just be careful out there. So naturally, the Esterhaus warning's back. You could call it DEFCON 1 at this point because they took out support. There's a lot of other notes here, but I think when you read the top notes on this slide, that's the thing, is when it doesn't really typically get much better, that's when you've got to be wary of that out of the blue rug pull. And I think fortunately we're talking about that because knowing, right, this is what can happen. I didn't think it was going to happen so quickly. If that were to happen, I thought the tone would be set by a couple of poor, if it were to go that way, there'd be a couple poor EPS things, and then it would sort of like create pressure on the market, and then it would suddenly go down, and then it would pick up momentum like a snowball, like selling typically does. But it didn't happen that way, right? That downside scenario happened very suddenly once ASML really, I guess, just crushed the mood in tech and maybe the over ownership of certain things. So I'm just going to highlight a couple of things here. I still have the sense, right, that the off-camera stuff is on the way. There's more stuff, if you ask me, on the way. I do think that the be careful what thou wish for. That's another factor that you can't rule out as being a problem because it is historically. So, and just remember that the rate cut story also has crumbled 3 times prior. So there's a lot of tough things to predict right now, and the timing is even tougher to predict. So it's usually, right, when you're in those kind of situations, it's not easy going, not easy sledding. So again, that's all about volatility. I would say that I change my mind when I see new information, but I'm rerunning the fact that this is, to me, as the market is ignoring a lot of things, or has been. Maybe they started to pay attention to them all this week. Maybe that's why it's such a rough week with things down, I think 5% in the Qs and stuff like that. So yeah, I think you have to be where we are. We just talked about that. And then I still think, right, what happens next is largely going to be determined by the results and the commentary. That's where I am. But I think the problem is, put another way, they've masked so many problems for so long that having done that, like having masked things for as long as they have, if the truth starts to come out about it, and it's not just this administration, it's the entire government ran by ran by both parties over the course of time. So I should say major parties, since I'm more apt to vote for minor parties, but myself. But anyway, both major parties over the course of time. So with that being the case, that's when the truth is revealed. Should it be? It's just to me, it's going to be devastating, because people are going to realize that we're in a way worse situation than the mirage that they've been able to sustain would have a lot of people believe. And I looked into some statistics, and a lot of people believe the mirage still. So, and I guess they're probably doing well, and maybe their families are doing well, whatever, and they don't see it in their day-to-day life. But I think it's out there. Anyway, on that note, I'm going to stop the share. We're going to reposition, talk about the charts, but I'm very, as you can tell, like I'm really seriously concerned about this market and what happened here this week. Let's start out with I'll start out on one of my main charts here. And this chart is going to be right there. We get its share back on number 4. And I'll try to remember to cover everything that we typically do, but I really have to get this done for everyone, or it might not get done. That's why I just got started with things. It was a busy day, busy week. Anyway, this is the ASML annihilation. They just crushed this, right? It got crushed on day one, and they just kept crushing it. And you could see that they really broke the trend. If you want to use the 100 there, and dash white is the trend. If I drew I drew a support line up through here, it cracked that. I'm not going to do that, but this kind of longer term trend, that definitely cracked. Now, has the super long term trend cracked? No, I don't think it has, right? But this is pretty serious in terms of on a daily chart what happened here. And if you could say, well, what wasn't it in the charts where there was some negative divergences, higher high? We did talk about that in SMH, and there were some concerns there, but you can't really hang your hat on that, because you just don't know what they're going to say. And you can see the results are fairly respectable, right? But it's really what their commentary was that was frowned upon and obviously trashed in the market in terms of prices. So naturally, right, no matter what we look at now, that's going to be related to the semis. We'll take a look at SMH, since we started out with ASML. That's obviously rough, and this is now under real pressure, right? This has gotten serious quickly. Another one with negative divergences, right, and a big kind of reversal candle. And I think at least during webinars, if not last week's videos, we did talk about this could maybe morph into, right, a similar situation as to what we saw a month ago. And unfortunately it did, and that's the thing. And again, you could say, well, wasn't that obvious? You could have traded it. I'm not saying that. It's just that you really can't know for sure, because you might think you're onto something here, and oh, look, it's falling. And then suddenly, right, ASML comes out and says wonderful things, and they've got this thing being squeezed. Daylights are being squeezed out of it. So you've got to keep that in mind. But look, we've seen plenty of these sort of flush outs, right, where they take things below a major SMA, excuse me, but in SMH, and then they reverse them. I'm not predicting that, but I've seen a lot of that, of late in different things that were not really enjoying a good run in the market, and they kind of did one last flush out and then started reversing them. I'm not predicting that here. I still think there's probably more fallout here overall, but and we did have more paper, by the way, in NVDA. So NVIDIA. So we'll go over to that one. And I think the trigger I put on that is the 50-day SMA, which I'll try to get in better view here, which is the gold line. And I think that's 116. It was 116.16 at the time, I believe. So it probably sold off a little bit from when I put the idea in. But there was a bearish three-way that hit in there. Remember how if you follow me in the services, I'm always a believer that when you come down to a major support level like the 50 SMA or just a price action based one, or even, something that's an extension from other support points. In other words, a simple support line on an angle or slope support line. Usually they'll respect that the first time they touch it, right? So it normally won't just go right through usually without really bad news that's specific to the stock or just devastating to the sector or something like that. But the problem here is that they held it for 3 days, right? So it's already kind of served as support for 3 sessions in a row, and they haven't been able to get it away from it. So now that sort of becomes, well, if that gives way, then you've got, right, you don't have a lot of, because of the nature of the way that this moved up, you just don't have a lot of support below the 50. And that could really open up the gates for a larger drop towards the 100 and maybe even to close this gap here. And I'm just going to put a little oval there. This is my typical way to just remind myself that there's something there if I'm kind of in a rush and I'm usually in a rush, unfortunately, to get things done. But this is obviously concerning. I'm not a big fan of worrying about gaps after 4 to 5 days have transpired post gap. And you can see that they just run away from them. And that's very common. Once they've hung above them for 4 or 5 sessions past the gap, it almost doesn't matter anymore until, right, you have a possible trend change. And that's what you've got here. You've got a possible trend change with a lower high put in. You now have a lower low. They could lose the 50. That could open up, right, more selling there. And that's obviously a big name, so it's worth covering which is one of the reasons I spent time on it. But you can see that really is under pressure. And so this leads into a couple of sectors that we should talk about, because these SMH, right, NVIDIA, these were the leaders. They are getting shillelied, right? These things are, again, probably victims of over ownership. Every time, this is Thinkorswim killing me on, I did not double click there and just set that line. But even if I kind of give these wicks the cold shoulder and just draw right through them to get probably a better line, you get the idea. So that cracked that support line. It's on the verge. XLK is on the verge of cracking the 50. There's room down, right? You could see a flat line in there, down another, say, 2 to 3%. But probably the rising 100 there is where you're going to potentially end up with next in a big way. That's right near there. And as a lot of folks that watch the videos know, or in the services, remember, I would not bid right in front of there. Just like NVIDIA did not touch the 50, I don't think, this week, the bidders were right in front of it, right? Because they know that a lot of people are waiting at the 50 exactly. And you don't want to be that. If you want to cover some of your short, cover a little bit above the 50, or in this case, a little bit above the 100, so that you don't have so much company with you trying to get a fill on your contract or your short shares or whatever. But look, that thing took a really bad turn for the worse. If this month finishes poorly, this is the big kind of technical note that I want to make discussing about it. If this month finishes poorly, this is bad, because usually you just don't have one bad month. Now, what I will say, though, is typically if you have an atrocious month, you get a really decent bounce back the following month in a lot of cases, at least a tradable bounce back that we could trade to the long side and things. But that's usually easier to come by after an atrocious month. If it's just a bad month, that probably means there's a chance for more bad months to follow. So the other leadership area for the longest time had been XLC, and everybody will also see that XLC fared a little bit better, right? It probably didn't have the reports out, but certainly, right, that's not something that really you feel very confident about in terms of being a bull, the way it's just hanging right there. So I just adjusted a support line. I'm going to just adjust it a little bit further to kind of bring it into some closer to the action that way. I think that's really where it broke down. So basically, as we often say, right below the 20, which it played with really for almost 3 sessions towards the high side on these candles, it broke down from there. And now, right, you have to look at the 50. There's a flat line probably coming in somewhere near the 50, right? But this is also another another sort of hesitation. Now, we do have to admit that this is holding up better than the XLK, the Qs, but the potential for more is clearly there. And it's not, you could say, wasn't it oversold? Well, I would say it's getting towards oversold, but it's on the daily chart, it's not even below 40 yet on RSI. If you want to use RSI as just a general barometer, it's at 46. So there's a lot more that could happen there. And these are the former leadership sectors. So I think this is what I think is a problem, is that they're so owned by so many. And I think, as usual, a lot of people thought they were going to be one of the first players out the door when things started to sink, and now maybe they're not. What happens then? So this is certainly a little bit of a problem. I think that you could have a really, if this month, again, if the second half of the month is rough, this is not good. This could really mean that I think it could weigh on things for a while. So I would just keep that in mind. So going back to the Qs, I put trades in on these. I don't think you can rule out bull or bear at this point. The reason I'm saying that is because there's nothing that I can think of in the near term other than maybe like an emergency Fed rate cut, that I don't even know what would prompt that, but they could try to pull something like that off between meetings. It's not unprecedented, but it would be, this is obviously looks like hell, right? Cracking support, but notice how it has really gotten hit hard. You're probably on the low. You were probably off about, I guess it was nearly 6%. So a decent pullback for a change, overdue, as we said. But you can't rule out the old go back up, fill the gap soon, go back up, hit the underside of what was formerly support that I just highlighted in blue. You can't rule that out, especially when they've got the EPS reactions looming. So if they drew a bunch of fresh shorts in here, and I've got to think that they did, people that have been waiting forever because they're kind of more believers in the graphic I showed about leading economic index and things like that than they are in the way that Wall Street's been painting stock prices. So there's probably always someone lurking, waiting for their next short. And they might have gotten in here thinking this is it. And the gang is the master of regretting people that go in too big, too aggressively, too early. They're the masters of making life hell on people like that fight against the trend. So you can't rule that out. So we have to be prepared, in my opinion, for both sides. It's very easy to let this ugly week just dominate your thoughts and your gray matter and say this is horrendous. But we all know, right, in retrospect, that they always find a way when they want to. So you just can't rule it out. So doesn't look good, but don't say no, there's no way I'm going all in on the downside unless you really mean it and you have the discipline to get out, right? You've got to really mean it and have the discipline to get out. Do I think there should be more downside? Yes, but as many of you know, my least favorite time, in fact, I hate it. I hate Fed meeting weeks and I hate earnings season, especially the start of it when all the big dogs report, and it's just, you just never know what's going to hit next and how it's going to be interpreted and what they're going to do with it. And a lot of it, I think, has to do with the internal plumbing of how people are positioned in the stock. That would mainly be hedge funds, and whether they're positioned and they can be exploited or not by the folks with the deeper pockets. It's a tough game. I'm not privy to that information. They've never been kind enough to share it with me. So I just hate the fact that the probabilities that I think we can put on our side in a very strong way at times, especially in the markets, that we can lean at the right times the right way, that gets taken away from us. Our probabilities head closer to 50-50 and not far greater than 50-50 when something's taking out our triggers and realistically trying to make a real momentum type move. I think that's when we're able to do our best. So it just actually, in other words, normal times. But it wasn't just, obviously, right, it wasn't just SPY, I'm sorry, a QQQ that got crushed. It was also SPY that took a kind of a serious beating as well. you could see that it did hang in there better. And this also is nowhere near oversold just with what happened. It's really close to 50 on RSI, as a matter of fact. So this can pretty much do anything, right? I think could you could you rule out that they kind just march right back and close this gap very soon on a couple of earnings that come out next week or some kind of an announcement? I don't think you can rule that out. I'm not expecting that. I'm just saying I wouldn't rule anything out. This is one of the keys, in my opinion, is that you stay very open-minded about what can happen. Even if you got your leans, just they can really get you when you go too far to one side psychologically. So you want to try to be open to something that, even though you don't think it's going to happen, that it actually may be underway now. Which is why this is one of the reasons why this is a tough game. But you can see that this is a flat line. I guess we even had that there right near 549. They closed at 96. They closed it right near that 551, about a point below there. So right, the 20 cracked. Would I have taken the trade? Yeah, I would. I just probably wouldn't have taken it in a big way, or if I were looking at a short. But I did put a bear side in here today. I think the trigger was a little bit lower. There's a bull side in there as well, because like I said, I just can't rule out the possibility of a bounce attempt, mainly because they've got earnings to hide behind. So if all the commentators on TV will be giving you 1 week, this market's schizophrenic, 1 week we're doing this, the next day we're doing that. And it's, the earnings will be the story. Well, these are just great earnings and people are just rushing back in, seeing these earnings. They'll come up with it. They've got every story in the book in somewhere in the reference material that they can trot out. So I do think there should be more downside. I would think there should be something more like this, where you kind of have a couple of rough ones. But remember, that would really negate, right? They would almost fully negate the wonderful stuff that usually happens in July. But I don't know if this is the July that I thought it was going to be anymore, after, as I said, after what happened this week. So it's a very tough call at this point. And I think just volatility is the order of the day. And if you normally like to roll, I know we have some traders that like to roll when they get up a certain percentage. I mean, if I get up 40%, I roll to the next strike up if I'm riding a call or what have you. Well, you may want to roll when you're only up 25%, right, in a market like what we may be heading into, when it gets really unpredictable and dicey. Right, the way to come out ahead on that is through greater discipline, even greater discipline, and by going to be taking singles. If you see a sea change, it's a different story. And on that note, I'm going to kind of move away from the major index ETFs, and I'm going to bring this up. What I mean by sea change is, we talked about it last week, how things were going wonderfully, right, in terms of market breadth. Everything started to improve. They were coming after everything. So when I see that they're really forcefully buying a lot of different things, and it's a sign of greater market health like it was, then obviously I'm not if I'm not overbought, let's say I'm at 60 on the RSI, right, and whatever I'm trading, I'm not going to worry so much about rolling up for 25%, right? If there's plenty of ATR left and things like that, plenty of time in the day, I'm more inclined to just let that thing breathe and work its way out, as long as I see the price action working out and playing out according to how it normally should. But if things start to really go the other way here and get dicey, right, like it did, you can't really trade that the same way, right? Because you're seeing deterioration, right? So if you see where they're moving things back up, and whatever you like to look at, you're like, well, this is not that impressive, I wouldn't fight against it, but I'm certainly going to treat like a rally that's, let's say, hollow, a lot differently than I treat a rally that's very broad and strong, right? I feel a lot more secure in that situation. So just a little thing to share there. But yeah, this is just our market breadth indicators while we're on here. These all took a real turn for the worse. And I think you can see the McClellan oscillator, that it tells you that this week was no joke. They really undid a lot of things that were working out very well in a big way, right? So you can't that's another reason why I'm not so sanguine at the moment. I'm definitely more concerned. I don't know how you couldn't be, unless you've got some really advanced stuff working. I'm just talking from a classical technical analysis perspective. But anyway, let's get into the diamonds. Now, remember, we thought these had some catch-up potential a few weeks ago. They could really start making a move. They did, but obviously, right, they did hang in there too until Thursday, and then you could see what happened, right? New all-time high and reversed, right? So the selling really started to spread out where it became more of a risk-off situation later in the week. Initially, they were kind of shaking it off, even after I think ASML reported. It wasn't really spilling over that first day into the diamonds, nor was it spilling over into IWM, but then it finally did. So that tells you that it became a little bit more of a risk off situation in my mind, and we could flash that in IWM. And I didn't have any paper. I couldn't trade anything in diamonds, but I did get some paper that appeared in IWM. And every now and then I'm really always torn because I just believe in trading the paper in both directions. Because as a market maker and desk trader, I know that synthetics are a pretty common trade. And so people will often buy out of the money calls when they want to start shorting the daylights out of something. But a lot of people have a hard time with that because I guess they just don't have that market maker perspective. So I don't always dual side these ideas that I enter. A lot of times I stick with the ostensibly the lean of the UOA. It frustrates me, but I don't want people to get themselves to get too frustrated that don't appreciate that with the perspective that I do, and not everyone does, so I get that, but I just can't stop myself from thinking the way that I do just for all the years I did it. But anyway, IWM, I really hate something where it makes sense and I'm going against it, but this became a little ridiculous. I should say maybe a lot ridiculous. So what I mean is that it makes sense to me with rates coming off, and having this massive laggard performance situation, that once people were convinced that rates were going to start to come down again sooner, more forcefully by the end of the year, and that would be the start of this wonderful easing cycle that would help out small caps. It all makes sense to me. So I don't like fighting against things that make sense to me that way, but this became so overbought. I saw some folks put other things out there on it, but I was able to do it myself with my own stuff that's designed for that. And I had it the most stretched on one measure, as it was since 2017. And another one, it was the most stretched since post COVID madness stimulus, where trillions became injected into the economy. Some people say 7 trillion total, others say 11 trillion total. I don't know where the right number is. That's just the range that I use, but from having read different sources. But anyway, when you get that stretched, and that was actually on this day here. And my plan was, I even noted it in the idea, I was going to move the trigger price up and just trail the trigger to a higher level using intraday data to do so. And I got my hands full on the morning, that particular morning there on Wednesday. Couldn't even get back to it. Before I knew it, it was right back near the original trigger level. So I just let it go at that point. But I think so we did get some reports that some people took the trade. I have to say, though, I'm glad they did well. I still think there could be more downside. You could see this gap is, maybe possibly going to get filled there. There's a whole nother gap here. I don't like the idea that I think I even said it at the time last week. I don't like the way IWM left this triangle. I don't like that it left this consolidation the way that it did for long-term sort of stability purposes. But it happens sometimes and things carry on. But ideally, I'd rather not leave it that way and leave these sort of gaps that are concerning at the start of a big trend change. It can persist, though, so it's not something I worry about once 5 days have gone by. But having said that, this is now still probably stretched and due to come back. It could come back to the top of the range. That would, excuse me, put it somewhere near the 10-day and so on and so forth right there. So that's kind of that for now. Even though it's already off a decent amount, right? It came off 10 points roughly. It still has a 64 RSI reading right now. It just goes to show you how overdone it was. And now that I'm bringing that up, I may as well try to show that if you're newer to this stuff and you're like, where's this guy coming up with this stuff? I just take a very long-term chart and I do a look back on it. I say I do a look back on it. And then I put my cursor up here and I can see when did my RSI get this overdone. And you can see that really, if I put it up to the right level, which is up there, nothing going back to the 2020 is that high. You have to go back towards, I think, let me double check. You have to go back towards this part here. Yeah. Well, I mean, actually, that looks like it's nine. No, that's not it. There was one in 2020 that was just about that high, and I can't find it. It might have been on a different look or a different setting. But I found something like that, and I thought, man, I hate to do this because we preach trading with the trend, and especially one that makes a lot of sense, I think, in terms of the way interest rates were behaving, at least from that perspective. But yeah, it is backing up, so there could be a little bit more there, and it's not crazy for something to break out, come back, test, hold, and then go again. So we'll have to wait and see on that one there as well. But let's bring these in right here, because this should be showing my grid of 12. And I'm just going to blow things up because I don't want to belabor this. It's not the week for this when everything sort of goes risk off to some extent. But you can see that this is why this is concerning to me is they didn't rotate. They didn't say, uh-oh, I'm going to rotate back into tech. I feel like that this broadening out thing has gone too far too fast. And let me, now that tech's sold off, let me start buying some of that because I like that more anyway. And I'm going to get out of this. I'm going to get out of these other things I rotated into just now. But they actually sold the daylights out of tech, XLK, XLC, right? They sold those anyway in a big way, and they still sold everything else practically back off. So it became just right selling, selling, selling. And really the only thing that withstood that fairly well was XLE. We did have some bullish ideas in there. There were some that performed nicely. I would say that for given the circumstances, but it's going to be really probably very hard for them to really turn into windfall type trades for anybody with the market behaving like this, the way the rest of these sectors are, right? So there's just not a lot we can do about that. That's why, again, you've got to, it's almost like you're just starting and stopping, and you're a driver, right? And you're out there in a race and you're navigating, and you've got to, it's old school with a clutch and manual transmission, right? And you're doing everything you can to sit there and zip around everybody and do this and that. But sometimes you got to slow down so you can wait for an opening. And then when that happens, you get your opening, you start making a more advanced move. You get the idea. This is what it required this week. So even things that were really ignoring the market and what the market was doing, they finally started to give way or succumb ultimately, because they were relentlessly selling really the leadership areas that we started out talking about. So with that in mind, I'll also mention a few other areas. XRT, we had some paper in here that came in that I decided, well, I hate trading this index because I don't like the construction of that. I shouldn't say index. I don't like the construction of that ETF. Ryan and I just always look at it. We just wish that there was more activity in other indices that are related to retail. This is not that it's a bad one to look at for what's going on in retail, but it just isn't a really big mover. So you just don't feel that great about it. Crypto did do fairly well. We had a couple trades in crypto, and then other things. It was hard, believe it or not, it was still fairly hard to come by some bears, where not everything, not a lot of paper was really appearing on the bear side. And I think maybe people were in disbelief, having not seen some rough stuff for such a long time. But one of them was XBI. There's a little pullback that was just going on there. I'm trying to think of other ones that I might have been able to get in. Uh, I think Google, yeah, I put Google in, I put Avgo. I actually got paper in Avgo when we put Avgo in. Let's see. So Google traded down. So that's not too bad. But again, like I knew with earnings coming in, gang, that we might not get a chance to get a really big sell off. They might not want to sell it off in front of earnings in a big way. But again, with UOA, you got to take what you can get. The Avgo trigger was 160.60 and it got down to 153.90. So I guess we have to take that and be happy. But I really thought that it could get a gap closure the way the market got ugly, but we just didn't get that low. That would have brought us down in about another $3, but we just did not get that low in there, unfortunately. It is what it is, and you just gotta, right? You just gotta keep sticking and moving, sticking and moving. Let's take a look at a couple other key things. Like I won't go into all the details. We'll maybe just look at some of these things, but XHB, we've been looking at that one. That held up fairly well. There was some in silver. I know they definitely started to hit that. When the dollar started coming back, they started laying into XAU, which tried to hang in there early in the week. But again, the dollar started making a comeback in the last couple of days, and they started to lay into that as well. But the reason why I'm not going into like exact details on, hey, this is the level we should do this at, or I'd start doing this at or that at here. There's the SLV, is because this is a messy market, right? I think you're in a very messy market where this is now, I think messy and volatile is what you have to expect. And so it's going to just be, whatever flows through the services and whatever specific levels we iron out. I still think even those, I'll have confidence in those levels, but even with that being the case, I would still say that you've got to still be super disciplined. And I think, I think you stay in singles doubles mentality until you start to see bigger moves occurring, right? On the upside, that is. On the downside, if the selling just continues this forcefully, I would not do that. I would still roll, of course, but there's that little dollar comeback I'm talking about. And TNX did the same thing. But I would just say, look, I would on the upside, right? I would definitely want to see something. Oh, I forgot. I keep forgetting every time we do this. I keep forgetting we've got to put the new symbol in for this on Thinkorswim, which I think is CGI. But yeah, I mean, rates were getting walloped, and then the rates themselves started coming back. And then I'll just bring up the VIX because we often do. But that's what I would do. I mean, I would be a little ginger about the upside for right now, and I'd be more of a waiter on the downside. And I don't think, obviously, don't think this tick is right. I guess I could correct that, but I don't know what the right data is, so I'll have to look that up or wait for them to hopefully correct it. But anyway, you could see, right, the couple of weeks leading into what just happened here. I said, I hope that if you had your chance, you asked Greg or Ryan or Bill or Stu or Scott or whomever at Market Rebellion about how you could take advantage of this for the longer date. And I know that I'll just say Ben L, which was Ben's a long time rebel. He's been with us for years. He's done super well. He's a very nice guy. I want to thank Ben for giving us the updates through Twitter, because he is really, it's nice to know that the work that you do is helping people. And we sit here and just work, and we have no idea what's happening with these ideas that we put out in the commentary we make, and to try to help out. But it's nice when you get that feedback to see that somebody's doing really well. And Ben, I hope other folks join Ben with some VIX call buying. So at least one person I know is out there and said, you know what, I think this VIX acquisition or maybe some puts or whatever out there somewhere in time with the vol this cheap makes a lot of sense. And it's a lot more pricey now, right? You're up quite a bit from the 12-ish handle. It's not exorbitant yet, but remember we talked about that 50-cent trader that came in a few weeks ago with a big set long trade that they put on. I'll definitely report that if we have more of that next week. But um, I think for the most part, that is really it for now. To close things out, I just think, as I said, I think you're in a messy and likely volatile market going forward. If it wasn't already going to be challenging, right? It's going to, I think, be extra challenging because I think you could have all kinds of sort of rogue wave type news events or out of the blue news events to come in and impact this thing. And that is another argument for very disciplined position management and disciplined, well, even disciplined trigger management when you're getting in. But that's really right. If you can still, if you can go through a crazy period where a lot of people are getting chopped up and frustrated and annihilated, and you can eke out decent little gains, you're a big winner compared to most people. Because most people, when you get into a volatility maelstrom, they get chopped up bad because they're slow to react to get in, slow to react to get out, and they overstay their welcome, and so on and so forth. That's what most new people happens to most new people. But if you, and that's, the people that are new are the ones that need the discipline the most, but they just don't have enough time in the market to appreciate the fact that they do. It's very cruel. It's very cruel. But people that stick around realize that there's times to go for the gusto, and there's times to just be a real professional and just take that money and run, take the money and run over and over again, even small little chunks of it, and just don't expose yourself in too big of a way. Everybody wants to do that sort of King Kong trade where they're on top of the world, but and there's nothing wrong with taking your shots here and there if you really think there's something there. It's just that when you overcommit capital, that's when it gets really painful. But if you can thread that needle a couple of times when it really sets up with just a respectable number that you can afford to lose, that's a different story. But I would say going forward, you should just be in that mode. I can't remember everything from week to week. So if you're in the services and you have questions about, hey, what do you think, Wayne, in terms of how would you be handling positions now? I'll tell you if I would have a little bit less of a death grip on the wheel, but I'm pretty close to having a death grip on the wheel. And I mean that in both directions. I don't want to come off sounding like I'm only bearish, even though I definitely feel like the downside potential just grew immensely this week. I also know that these guys are very crafty, and that's an incredible understatement. So you can't rule anything out when you're going up against the gang. The only way to beat the gang consistently is to take what they'll give you and rarely veer from that. That's been my experience. Or you can't force it on the gang. You've got to just work in concert with the gang, take what they're willing to give you, and just not overstay your welcome. And that goes back to the oversaid old adage of bulls make money, bears make money, but pigs get slaughtered. And there's a reason why these phrases exist, as sort of corny and trite as they are. And there's some truth to these things. And just like the trend is your friend is probably the worst thing to the ears, but the best thing to tell anybody. So that is the truth, though. These things are true, and I think that's what you're gonna need to get through here. And again, I always hope I'm wrong when I'm giving out comments like this, because, or you could say even tips or advice in this case, because it's not about the stock, it's about how to handle things. And I just think that being prudent and disciplined is what gets you through the rough times. And I believe that very strongly. I've seen people be the hero and the zero in very wild periods. And it just depends on if you got, a lot of times it just depends on if you got lucky or not. Because a lot of these people that I knew that I'm thinking about, they were not burning the midnight oil doing research. They were probably still up very late, but I don't think it was because they were burning the midnight oil. Let's put it that way. So it just goes to show you, right, that there's some sort of randomness or fate that's part of the whole thing too. But for people that treat this seriously, I think, want to do this and build something, you've got to keep your discipline, keep your wits about you, and keep your eyes on the news, right? At this point, I'm probably going to be forced to have to turn the television back on to listen to breaking news, because this type of a period between now and the end of this year to me shapes up as that type of a period that news events have the potential, unexpected news events have the potential to really change the market's dynamic one way or the other. So I probably spent a little too much time on that. For that, I apologize. But again, it's really heartfelt from just having seen too many people not respect the risk that can mushroom up in markets and happen very quickly. So on that note, I do hope you got something out of this video that will help you in the week ahead or in some other week in the future. I want to thank everyone for tuning in. I wish everybody a great weekend. I wish everybody well next week in trading. And as Esther House said, stay safe out there or be careful out there.